Mark, in outside the box, which I referenced earlier, you identified three forces that taking away the importance of goods trade in terms of how we're developing economically. That was aging demographics, miniaturization, and services replacing goods. Is that idea affected in any way, or how you view the future? Is that affected in any way by supply chains being these foreign policy weapons or national security issues? How do you look at that now moving forward?
It's interesting to see governments trying to restrain the flow of ideas. We're seeing that a lot more. So something is now national security information related to the production of this or that, and the government is trying then to avoid scientific interchange, is trying to avoid the disclosure of information that might previously have appeared in patents, trying to control the intellectual supply chain as it might once have tried to control the physical supply chain. And I think we're finding that governments are not having a lot of success doing that. That's certainly the effort. And you see certain agreements by companies to do that. Okay, some companies, for example, are saying we will do our research for the China market in China, and we will do our research for the European market in Europe. You can't believe that that's actually happening, right? Yes, officially that's what they're doing, but the reality is that they don't get any benefit from doing that if they're not sharing information within the company about new ideas and new approaches to production and new products and all the rest. So there's a lot of information still flowing back and forth that is not recorded, and that's really, I think, where the action is in the international economy.
Just back on Neil's fracturing theory, if they say the US block trades more internally and supply chains are more about resilience than efficiency, this does raise questions about how goods are moved and in what volumes. I mean, previously when we've spoken, Mark, you've been skeptical, for one example, of mega ships, these massive 24,000 TEU vessels that the carriers keep ordering. So if, again, a flight of fancy, but if Europe and the US, say, do turn away from trading with China, these ships aren't much use, are they?
In a few places for a few purposes, but I think we've seen a clear division among carriers. Okay, some carriers have continued to buy vessels like that. Other carriers have opted for vessels of a somewhat smaller size. You've seen just in the past couple of years very rapid shifts in trade patterns in Asia that I think relate to that. Okay, we've seen, for example, very rapid growth in trade between China and Vietnam. Seen very rapid growth in trade between China and India. Does it make sense to put a 25,000 TEU ship on a route between China and Vietnam where it's going to spend not very much time at sea and a lot of time being loaded and discharged? I'm not convinced that it does. So I think that this restructuring of trade that we're seeing really weighs against having these extremely large vessels except for certain purposes. There may continue to be demand for that between East Asia and Europe, but I think you're going to see that trade between East Asia and Europe is a diminishing share of the world's trade, and that means that there's going to be a limited demand for these kinds of vessels.
Looking long term, how should the logistics industry and freight buyers prepare for these massive changes that we're considering today?
It's tough in an industry where you've got to make a lot of capital investments. One of the investments that I think is particularly challenging at this point actually is in the port industry. There's a lot of money around the world going into container terminals. It's not cheap, and yet we're seeing a lot of shifts in the patterns. So you could easily end up expanding a container terminal and then finding that the business is slow to come there, and I think that's going to be a challenge for a lot of people. I think that there's certainly a premium on flexibility and on risk management now. And we're seeing that. I think all in all, the logistics industry has performed very, very well since the pandemic and since these major shifts in trade policy. There's been surprisingly little interruption of goods trade despite all that's going on. And that's really quite remarkable.
I just want to dig deeper on something, Mark. It's this shipping and geopolitical link in US policy. This administration keeps talking about rebuilding its merchant fleet and shipbuilding base, but is that actually realistic or even necessary anymore?
Oh, it's more than rebuilding the merchant fleet. The current U.S. administration is extremely fond of the word dominance. And so it's talking, among other things, of maritime dominance. I'm not an expert on naval affairs by any stretch, so I'm going to leave the U.S. Navy aside here. But when it comes to commercial shipping, the idea that the United States is going to be somehow a dominant player is crazy unless the United States is prepared to pour a lot of money into this. We've seen, not just for years, but for decades, that the shipbuilding industry is extremely heavily subsidized. In some cases, the ship operating industry has been heavily subsidized. And I'm not sure the United States is prepared to play that game. To have an effective maritime industry, in my view, the United States is going to have to rely very heavily on its allies. And you could envision perhaps a maritime industry that still builds its ships in Korea or Japan, but has components from many different places and is less reliant on China for components or for vessels. That potentially makes some sense. The idea that we're going to actually build a lot of commercial ships in Philadelphia or Pascagoula, Mississippi, I don't think that makes any sense at all. That's just not going to happen unless the United States is prepared to heavily subsidize the construction of these ships and the purchase of these ships. And I've seen no sense at all. I might add that thanks to other trade measures, the United States now has by far the world's most expensive steel. Okay? Steel in the United States costs well over twice what it costs in China, costs nearly twice what it costs in Europe. Oh, and by the way, steel is the largest single input into building a ship. So it's just not thinkable that we're going to be able to build ships in an efficient, cost-competitive way in the United States and sell them to any commercial buyer without a lot of subsidies.